Hi everyone, welcome back to my channel. Now let's start with a major update in the market. Now Mike Wilson from Morgan Stanley, known for his bearish stance, has finally turned bullish. He now expects the S&P 500 to trade much higher, a complete 180-degree flip from his bearish calls since 2023. While his prediction was spot on in 2022, the last year and a half have been quite the opposite. With the Dow trading at 40,000 right now and the NASDAQ just broke 17,000, the pressure to flip must be very significant. However, the market isn't as forgiving if the Federal Reserve get it wrong. Recently, relentless inflation has made the US bond market very edgy, with the 10-year yield moving above the critical 4.5% resistance, potentially touching the 4.7 level. If that happens, traders expect more volatility in the stock market. All right, with that disclaimer applied as usual, let's go into the details. Now, first of all, congratulations to all the NVIDIA stock traders. NVIDIA climbed above 1,100. In fact, the high was 1,150, nearly there. It's interesting to note that while the NASDAQ rose, the primary was due to NVIDIA, the Dow Jones actually came off. And one thing to note, right, many people should be quite unhappy. For example, the Stanley Druckenmiller, he has sold off all his NVIDIA shares before the run. So not too sure Wall Street is trying to do something to him. All right, nonetheless, a very important thing is that one of the last few big bears of Wall Street have decided to flip his position. As a matter of fact, right, the media has a field day. You can see that everybody was covering this story. They really like trying to mock him instead. All right, now the thing is Mike Wilson says that because of the increasingly unpredictable macro environment, that basically changed the heart, all right? And of course, the media was covering it, as I said mentioned earlier, as he was looking at 4,500 previously, okay? Now it's a 5,400, it's a really big flip. And of course, the others are looking like Wells Fargo, Oppenheimer, Morgan Stanley, Deutsche Bank, BMO, all are looking at a higher level. In fact, BMO Capital, let's look at it. BMO Capital, right, is looking at the market for S&P 500 to go up all the way. Let me see the numbers. He's looking at 5,600, Brian, all right? He's looking at a much, much higher level. So in fact, the reason is because he feels that, right, the strength of the market momentum is still there, the underlying is still there. So that's the reason why he believes that the S&P can go much, much higher. So the thing is this guys has been calling for buy. Then what's happening now? Look at the Dow. The Dow Jones now is down 200. After that, the following few days, the Dow Jones down by 600. So if you look at the chart on the Dow Jones chart, we can see that now the closing of last night is actually below the WMA 50, suggesting the possibility of further downside if the selling momentum continues. The Federal Reserve meeting minutes indicates that the lack of progress on inflation, and that is one of the reasons why there is a concern right now. And you look at the chart, you look at it with the previous positioning. Once the market loses the MA50, the downside will be around 1 to 2%. And of course, if things get serious, we can get a 3 to 4% move. So it happened before back in April. You see that it went below the moving average. We had a bit of sideways event before the market succumbed to some selling. So I kind of believe that this might be happening if you look at our chart later on, yeah? So what is happening right now is because the Federal Reserve, the meeting minutes actually indicates that the lack of progress in inflation, which are trying to combat it down to 2%, but it's been staying at 3% all this while. And as a matter of fact, okay, you can see right now the most recent inflation number shows that, right, the staying above the 3% mark. And if you look at the next FOMC meeting, it's about 14 days later. It seems to be citing that, right, there'll be no change on the day of 12th of June. As a matter of fact, seemingly some people are even looking at a rate hike instead, 1%. All right. So if you look at what's happening right now, Fed Kashkari, right? This guy is a non-voting member, but he has been very, very, active recently. And he says that, right, interest rate hikes not entirely ruled out. That means that he actually says that there could be a hike instead, while Wall Street is looking at a cut. So the only safe one we look at it was 18 September FOMC meeting, which I also believe in that by September there should be a rate cut just ahead of the US presidential election in November. That's how I feel that will be how they orchestrated it. So to me, there will be a rate cut. I don't think there'll be a hike. I think a hike will kill the market. I don't think so. But a cut, I think, will likely be happening only in September. If you agree with me, let me know in the comment box. All right. So with all this information, right, there's something that caught my attention is that last week the Hindenburg ointment, right, was triggered, causing some traders and investors to worry and probably take profit. Although the accuracy is less than 30%, but it did predict the 1987 and the 2008 financial crisis. So think about this right now. If there is all this thing ongoing and then everybody is kind of so bullish, don't think that it's a typical pattern that always happens before the market sells? Let me know. All right. So the only last mega bear, okay, that's left on Wall Street is the JP Morgan Marko Kolanovic. Right. This guy, he has also been riddled because he had been calling for sell too, and almost every time he calls for something, the market goes the other side, right? Something like a Jim Cramer thingy. So he came in and said that, right, he sees no reason to turn bullish on the stock market right now, despite the record high level. He, in fact, reiterated his view that the S&P 500 could fall by 20% to 4,200. Now, seriously, if you can get it spot on itself, I think it'll make a lot of money for the firm and himself, right? Don't you think so? But do note, that was just one day after Mike Wilson abandoned his bearish stock market call. So, okay. So if, let's say, he get it right, then Mike Wilson will definitely be sent to the courthouse. And of course, this guy will be in a hot seat, right? So one thing to note, he believed that the equities is not as attractive, and he believed that the AI won't save the stock market. So what do you think? Let me know in the comment box. Yeah. Now, most important thing is this: if we look at our own indicator, the TWB indicator, we can see that the boys have been selling. Now, one thing that we have and the market doesn't have is that we have indicator tell us when the boys are selling. So you can see right here, when the boys were selling right here, that give us a heads up. And of course, our traders have been selling and been profiting from this movement down. But one thing is that the momentum is still kind of positive at the moment. So if the momentum do turn bear, I believe that the selling could bring the Dow Jones all the way down to 38,507 level. So watch out for this, because now the market has broke below the short-term bearish mark. All right. And one thing that is pushing me towards this particular direction is because of the 10-year yield chart. You can see right now, I have mentioned before, 4.32% is a very, very critical support level, which the market had purposely touched this and recovered. And of course, the 4.5% level is something that we all know that the market took a while before coming down, and that's where it spurred the NASDAQ and the market higher, right? So now the same reason for resistance has been broken, and it was like the way the upside was pretty strong. So if this would continue, and once we hit the 4.7% mark, I can tell you that the market will really shake. And that will be about 2 to 3% movement if you ask me in terms of numbers. So guys, please be very careful. Watch the numbers carefully. And if this number really uptick, then you should be careful with your stock portfolio, yeah? All right, so with that, before we end this session, remember, those who are interested in trying out our TWB system on gold, all right, please text I1 in the comment box for today, and we will reply your message to tell you what to do with our email address, and then you can proceed to get your indicator. Now, this is for a limited time only, so quickly now, send the I1 command inside that. This is only for this week, which means that after this week, we will not entertain new comments. Yeah, so thank you for watching. I hope you enjoyed the video, and don't forget to like, subscribe, and leave a comment to get a chance for the special gift. This is Kel signing off. Take care. Bye bye.